Certainly some interesting movement that we're seeing on the Nigerian markets of late, with confidence seeming to slowly be creeping back in. What are your overall expectations of the kind of activity we're likely to see as we start this week off?
I'll start by saying that the kind of renewed confidence we have in the Nigerian stock market is justified. And the reason why I said that is not far-fetched. Liquidity conditions are a lot more favorable now. If you look at the fixed income, fixed deposit market, yields are considerably lower there, and even hardly justifies your purchasing power. So having a look at that, and also looking at the fact that foreign investors' interest, it's now in frontier markets, and Nigeria is one of the leading frontier markets where a lot of those international investors are interested in. And also the fact that a lot of the troubles we have in our banks, are being looked into by the CBN, and the AMC bill, is about to be passed. All these factors come together, to sort of further optimism. And my view is that that sort of investor confidence will also, spill over to this week, and I expect to see improved, positive reaction in the market this week. You
said specifically that we're also seeing low yields on the fixed income side of things. We are, though, starting to see some additional interest being directed towards that fixed income space. Nevertheless, with Nigeria now having removed all taxes on corporate bond issues and extending a cut in transaction fees as well, what impact do you see this move having on equity recovery, if any? Babatunde, can you hear me?
Okay, yeah, I can hear you now.
Just looking at
the last question again.
Just looking at some of the activity that we are seeing, we're looking at some of the interest being diverted towards the fixed income space, simply because we're seeing moves by Nigeria, like removing all taxes on corporate debt issues, also reducing or cutting transaction fees as well, spurring some interest in the fixed income side of things. To what extent do you see this impacting some of the activity we're starting to see on the equity side?
Okay, thank you. Basically, what I would say is that the target market for these two set of asset classes are sort of different, even though you might have a bit of overlap, somewhere along the line. For the fixed income market, really, I think the target, especially for the corporate bonds, which you've talked about, which I also agree with your view that it's going to improve this year, basically, in the near term. And the reason for that is because of the two-tier tax treatment, what we see for the federal government, the government bonds and the corporate bonds. The government is planning to remove that and also reduce the cost of issuing corporate bonds. So I see a lot of issues on that side, and I see a lot of interest as well, mostly from the insurance companies as well as the PFAs. A lot of corporate bonds that qualify, to be taken up by the PFAs will be taken up, because I think there's a lot of interest in that area from them. But for the equity market, really, I think a lot of asset managers, institutional investors, and foreign investors would still have that sort of interest, in the Nigerian equity market. And as I said earlier, the environment is still favorable for the equity market. Yeah. Liquidity environment is still quite high. I think there's a liquidity glut in the market, really, that it's enough to be absorbed by, both the corporate bond market and as well as the equity market, really. So my view is that the issuance of significant corporate bonds in the market in the near term, it's not going to have a significant impact on equity performance.
Certainly more issues, not altogether a bad thing, where we see now companies more easily finance growth moving forward, which is, after all, what the investor is after. Let's put a few companies in the spotlight in that regard. Looking at Unilever Nigeria, it recently released its full-year results for the 2009 period, showing impressive earnings growth and remarkable growth margins as well. How are you rating this stock at the moment?
Okay, what I can say about Unilever is that the strategy has really worked well. In the 2009, where we had a lot of issues around the economic environment, you can see a very strong growth in its top line, 90% growth in sales. I think is remarkable, considering the fact that most of its products are discretionary in the first place, and they achieved this by selling more in retail packs, which is something to just capture the lower end of the market, which I think shows strategic management in Unilever. Also, operating performance was actually very strong. Operating profit margin increased by about 4 percentage points to about 16%, which is also very remarkable. And how it did that was to leverage on the One Unilever buying strategy to obviously buy volume at discounts, really, which worked well, at a period where a lot of global commodities had a significant price rally. So I think all this culminated in a strong bottom line. And going forward, really, for Unilever, I think we're still going to see this sort of continued strong performance, given that it's spent a lot in terms of plants, infrastructure, and we'll see this yielding fruit, going forward. But for me, in terms of valuation, really, I won't really jump into Unilever at this point. I think the market has more or less reflected all this positive news that I've been telling you about. Trading at about 22 times current earnings and about 19 times forward estimated earnings, 2010 earnings. I think I'll be more neutral on Unilever stock.
Well, Babatunde, certainly interesting, given that some forecasts out there pin full year 2010 price target at 30.70 naira, representing a 14.9% upside